Expedia reported its first quarter earnings recently and presented some mixed results. Gross bookings were up 8%, but revenue only grew 4%. That was impacted by a slowdown in the online giant's alternative lodging business, which is going through a transition as Expedia consolidates the VRBO and HomeAway offerings onto a single platform. The question is whether Expedia, who is significantly behind Airbnb and Booking Holdings, can keep pace in the profitable home sharing space. International gross bookings also slowed, up just 4% versus the first quarter last year. Gross bookings were driven by strong performance in Expedia's partner solutions business, as well as at Expedia.com. Analysts were surprised that VRBO, now rebranded as Vrbo, saw gross bookings growth of just 4%. Vrbo is the consolidation of VRBO and HomeAway. Expedia will move the alternative lodging business to a single technical platform and a single brand focus. But Expedia CEO Mark Okerstrom said that growth was suffering as they moved through the transition to the new brand. Okerstrom also stated he would be bewildered if the company did not have a deal in place with United Airlines when their contract expired later this year. The two companies are engaged in a bare-knuckle negotiation. United President Scott Kirby recently stated he expects to not be listed in Expedia as of September. Here were Okerstrom's comments related to Vrbo during the company's first quarter earnings call.
Brand, and we intend to expand Vrbo to international markets in phases. We spent the last several quarters laying the groundwork for this shift. Although we are confident in our direction, our streamlining of brands and platforms has put increased near-term pressure on SEO trends, which has contributed to the deceleration we have seen in Vrbo's gross bookings growth. Despite this near-term slowdown, consolidating the bulk of our efforts behind the Vrbo brand globally and operating on a unified, world-class e-commerce platform will allow us to maximize our potential in alternative.
Expedia stock was down following the call, but over the past year, the shares are up about 10%. Expedia, shown in yellow here, has outperformed Booking Holdings in orange and Ctrip in red. Ctrip was hit hard recently due to the U.S.-Chinese continuing trade tensions, and Booking Holdings shares are down almost 14% as Brexit fears and a slowdown in Europe weigh on the company's results.